Vinay Jaisingh is now joining us, Managing Director, Portfolio Management Services at JM Financial. Vinay, good to have you with us here. Thank you very much for your time. So, a couple of stocks, in your portfolios look interesting. From a sort of, we were just discussing water purification as a theme. VATech, we were just discussing that with Deepan. You own Bharat Dynamics in your portfolio. We had the management with us earlier today on the show. Just start with Bharat Dynamics. Really, I was trying to press the management on margins. What's the steady state margin going to be like? Because it's been starting F5, 18, F5, 19, from 15% all the way to 25% down to 16, 17%. It's been a little volatile, but growth and revenue numbers, visibility, etc., looks pretty good. The management told us that revenues should basically double from where they are in FY23. So they should double by FY27. What's the call and what's the thinking, Vinay? Bharat Dynamics.
So, thank you for this question. Very clearly, we are in the same camp that defense capex is on the rise by the government. Be it missiles, be it rocket launchers, Bharat Dynamics has good products. Its order book is an impressive 6 to 7 times. It's trading at about 20, 21 times 1 year forward earning with a return on equity of about 24%. What makes it even more interesting is its PAT growth. Though the top line growth may be 20 to 25%, its PAT growth is 50% plus. It has a good cash situation, so net debt is not a problem. And margins, even if they were at about 20-ish%, we are pretty happy. In the longer term, as exports grow from the current 7-8% to about 15%, I'm talking about 5 years, you'll start seeing margins inch up further. So I think exciting times for lots of defense names, but in particular, we do like Bharat Dynamics because its order book size and execution cycle is a lot smaller than the other operators.
Hi Vinay, good afternoon. You all have been one of those who are early into this one, but would you add at current prices or would you sit and enjoy the ride for now?
We would add Bharat Dynamics at current prices. There are other defense names which we were also early in, which we probably would sit at for now. But again, the important note here is just one. It is if your order book is good, which is 5, 6, 7 times, which means your visibility for earnings is at least for 4 to 5 years for a 20 to 25% growth. And your margins are also going to be improving for the same reason. I think that's the reason why we like this space.
Devyani International is also one of the stocks that you like. Now, the numbers have not been good. And, we were talking to one of the analysts and they indicated that the consumer demand environment has not been very strong in April, May and June. So if anyone thought that the consumer sentiment, the demand would revive after a sluggish Q4, it hasn't. Which means there could be pressure on the top line. And then today you've got news about tomato prices hitting 100 rupees. Would you be worried about names like Devyani International on account of top line and maybe margin pressure?
So, when you're saying names like Devyani, let's just talk about Devyani for a minute, because Devyani's business model is a little different from the other companies just because it's increasing its number of stores. It has about 1,250 odd stores today. And in 2 years, it's increasing its stores by 25-30% to 1,800. So if just the number of stores increase for a company in different chains, be it Kentucky Fried Chicken, be it Pizza Hut, be it Costa Coffee, what will happen is your single stores sales is also increasing. So the earnings growth of 20 to 22% on the top line and bottom line growth of about 25%, I think is a given for this company. And interestingly, this is one of those companies wherein though its PBT will grow at 25%, even its ROS is at about 25%. So, good earnings, reasonable valuation and good return on capital employed. Devyani fits the bill for all three for us.
Vinay, we were just talking about VATech with Deepan earlier. Since you own it, you've obviously done a lot of work around it. You maybe have looked at other companies in the space like Ion Exchange, etc. Just talk to us about what the underlying theme is, and are there any risks? I mean, VATech had lots of receivables around which they had issues for years. I think out of Sri Lanka, etc. Yeah, but is that all sorted?
So the good news for VA-Tech is a lot of its risks are sorted, and its biggest risk earlier, as you rightly put it, was working capital, which was at 95 days. It's down to 65 days. Our analyst tells us there's a chance it will go down to 60 days. It's today trading at 1 year forward earnings of 9-10 times. Again, sticking to our previous conversation on defense. The order book here is an impressive 13,000 crores with revenue size of 3,000. So even out here, the order book to sales is north of 4 times as compared to earlier. One big change is now you have collateral and a way to get money for VA-Tech, which earlier was missing. And its tie-ups, because of the reason it got caught in terms of working capital in the past, it's thinking a lot more today than it ever did before. So yes, we like it, and yes, we are buying it currently.
Okay, all right. Vinay, but tell us about, you're in the minority on this one. The banking names in the financials, I don't think you're too enthused. Could you give us the rationale out there, or are there select pockets that you like from the banking and financial names? Most of the street, there's a consensus buy out there, but you have some reasons. So tell us about that.
Sure. Thanks, Nigel. So first and foremost, if I look at the earnings contribution of the banking and financial sector in the last 3 years, it has been about 30 to 35%. That was largely because there were provisions made on COVID, which went away, as a result of which the PAT growth was, between 40 to 45% for the entire sector in the last 3 years. That's soon to change to top line growth, which would be the loan book growth, which could be 15% to 17%, would lead to a profit growth of about 12 to 15% for this sector. And hence, as the contributions for the financial sector goes down from, say, 33, 34% to 27, 28%, as far as index contribution is concerned, we are getting a little lighter on the banking and financial sector. Having said that, we are betting a lot more on pure banks, the large banks, some public sector banks, as compared to NBFCs. So primarily contribution going down should lead to them not doing relatively well on the markets as well as a space as a whole.
Cyient DLM IPO update as of 2 p.m. It's been fully subscribed on day one and it stands at 1.65 times. The HNI subscription stands at 1.9 times. Retail is at 6.6 times. I guess QIB has not been very substantial as of now, but it's been fully subscribed. Vinay, any thoughts on IdeaForge, the drone manufacturing company with a 50% market share, or Cyient DLM, which is an electronic manufacturing services company? The spaces are both very hot. They cater to defense, aerospace, and all investors are lapping up the listed names here.
Oh, my apologies. We haven't got compliance approval to talk to these two. But on the sector, we clearly like a space wherein you're seeing the government push manufacturing. But apart from these two names, there are other spaces also, which are listed already where you can get exposure to manufacturing, defense, rail, being one of them. So we like them a lot more. But the space, the industry, which is growing for all the names that you mentioned, is fantastic as far as earnings is concerned.
Vinay, ever thought of owning an airline, Indigo? Or you owned it?
So no thoughts of owning airlines. See, at the end of the day, for us, what's important is the commodity pricing. Crude pricing is not in our hands. And as commodity prices keep on moving up and down, today, the important point for us is when we are seeing consumption growth come in and you can buy companies, trend companies like, as you mentioned, Devyani or, SBI Cards, where you can play a consumption theme, why look at other places where you could have other risks?
Got it. Even ticket prices are out of control, right? I mean, not in our control at least. But
you need to book a lot in advance.
A lot in advance, well in advance. Thanks very much, Vinay. Good chat. Thanks very much for joining us and running us through, a plethora of stocks that we discussed. Good to speak with you. 120 points, by the way, and I think just like that, from looking at supports and looking at markets